What if I told you the real game of trading isn't happening on your screen? What if the charts you're staring at are just the surface, and the real battle is happening inside your mind? Most traders think they're fighting the market, but they're really fighting their own emotions: fear, greed, ego, impatience. That's where every win, every loss, every decision is born. The truth isn't in the charts, it's in you. When you first step into trading, it feels electric. You see green candles fly, you imagine freedom, the car, the house, the lifestyle. You think, this is it. I've found the key. But the market has a funny way of humbling you, because what you're really stepping into is the hidden game. A game where the real players don't shout, they don't chase. They sit quietly and let your emotions do the work for them. Let me tell you a story about a rookie trader, just like so many others. We'll call him Daniel. Daniel was fresh, eager, and full of confidence. He'd been watching YouTube tutorials, paper trading on apps, and finally decided, I'm ready. He deposited 5 grand into his account, started trading small, and within a couple weeks, he was up $10,000. Every trade he touched turned to gold. He felt unstoppable. He felt chosen. He thought, man, maybe I'm built for this. But that's the trap, isn't it? The market rewards you early, not because you're skilled, but because it wants to hook you. And once it does, it takes everything back. A few weeks later, Daniel opened his charts and saw opportunity everywhere. He started increasing his size, started chasing more trades. He thought, I'm in control. I can handle it. Then came that one red candle. It dropped hard, then another, and suddenly, the whole trade flipped against him. He froze. His heart started racing. He thought, it'll come back. I just need to hold. Then he added more and more until margin called and the screen went gray. His wins were gone, his confidence crushed, his ego silenced. But Daniel didn't lose to the market. He lost to himself. He didn't realize that the market isn't about numbers or strategies, it's about behavior, his own and everyone else's. The market doesn't attack you, it reflects you. When you're greedy, it teases you. When you're fearful, it frightens you. When you're desperate, it punishes you. The market is a mirror, and most traders spend their entire careers fighting their own reflection. Institutions, the big players, they know this game well. They don't stare at charts like retail traders do. They study emotion. They study crowd behavior. They know exactly how to trigger reactions because that's where their profits come from. They're not chasing price. They're chasing your patience. They're not trading numbers. They're trading your reactions. You panic, they position. You chase, they fade. You sell the bottom, they buy it. And the whole time, they stay calm because they know emotion creates liquidity, and liquidity feeds the game. Let's take a name you know, Jesse Livermore, one of the greatest traders in American history. He said something that still echoes through time. The game does not change, and neither does human nature. Think about that. 100 years later, with all the technology, algorithms, and shiny indicators we have, human emotion still moves the market. Greed and fear are the only constants. Every boom, every crash, they're just emotional waves repeating through generations. Different charts, same psychology. Now here's the twist. Institutions have learned to weaponize that psychology. They create moves designed to make you react. Fake breakouts, stop hunts, false momentum. They know exactly where retail traders will jump in and exactly when they'll give up. It's not manipulation, it's strategy, because the market rewards patience and punishes emotion. So ask yourself this. When you trade, what's really driving your decisions? Are you reacting to what you see or what you feel? Do you chase green candles because they look exciting? Do you sell red ones because they make you nervous? Because until you learn to control that, you're not trading against institutions, you're trading for them. Let's get real for a second. The difference between you and the pros isn't information, it's interpretation. They see opportunity where others see chaos. They wait when everyone else acts. They think long-term, while retail traders fight for scraps. And that comes down to one thing: mindset. Trading isn't a sprint, it's a psychological marathon. The real skill isn't in predicting price, it's in predicting your own behavior. When Daniel finally stepped away from his losses, he realized something. It wasn't his strategy that needed fixing, it was his mind. He stopped asking, "What's the market doing?" and started asking, "What am I feeling right now?" He learned to slow down, to detach, to trade like an institution, calm, calculated, and patient. And slowly, the market started to reward him again. Because the second you stop reacting, you start thinking. And that's when you begin to see the hidden game for what it really is. Trading isn't about predicting what happens next. It's about understanding why it happens and how your emotions fit into the story. You can't control the market, but you can control yourself. And when you do, the game changes. That's where awareness becomes your first edge. So here's a question for you. What emotion controls your trading? Fear, greed, ego, or discipline? Drop your answer in the comments, because awareness starts with honesty, and every trader who becomes self-aware levels up. In the next chapter, we're going deeper into the invisible battlefield. We'll explore how institutions use emotion as their weapon, how they design traps built on human behavior, and how you can protect yourself. Because beneath the charts lies a war, and every candle tells a story. This is the hidden game. Imagine this. You open your charts. Candles are flying, volumes pumping, prices breaking out, and your heart starts racing. You feel that pull, that rush, that voice whispering, "Don't miss it, get in now." You click buy, and within seconds, the market reverses, stops you out, leaves you staring at the screen thinking, "How did they know?" Welcome to the invisible battlefield. Most traders think they're analyzing price, but institutions, they're analyzing emotion. They don't see candles, they see crowds. They don't study indicators, they study behavior. Because behind every trade, every click, every dollar, there's emotion. And that's where opportunity lives. Here's the truth nobody tells you. Fear, greed, and impatience, those three emotions are what create liquidity. Liquidity is what fuels the market. And guess who provides it? Retail traders. You, me, everyone who reacts emotionally instead of thinking strategically. That's why smart money doesn't chase trends. They create them. Think of the market like a chessboard. Every move you make, they already saw it coming. They know where the retail crowd will enter. They know where stops are hiding. And they use that knowledge like a weapon. It's not manipulation, it's mastery. They don't need to predict. They just need to understand how you'll feel. Let's make it real. You see a breakout forming. A clean move above resistance. Volumes building, momentum strong, Twitter's hyped. It's the perfect setup. So you buy. You feel confident, excited. Then, out of nowhere, the market rips higher just enough to suck everyone in and crashes right back down. You're trapped, stopped out, frustrated. That's not random. That's design. It's called a fake breakout, a psychological trap built on emotion. Because institutions know the moment people see strength, they feel FOMO. And that emotion creates liquidity. They sell into your excitement. They profit from your reaction. Same thing happens with stop hunts. Price suddenly spikes below support, takes out all the stop losses, and then instantly reverses. You think, what just happened? Here's what happened. Institutions needed liquidity to enter long positions, so they triggered fear in the retail crowd, forced them to sell, and used those orders to buy at a discount. They used fear as fuel. That's why trading isn't a battle of analysis, it's a battle of emotion. While retail traders stare at indicators, institutions are watching you. They're studying how you react to pain, to excitement, to boredom, because markets don't move from logic, they move from emotion. And the trader who controls emotion controls the game. Let's go back to Daniel, the rookie trader from Chapter 1. After his big loss, he decided to study what actually happened. He realized that every losing trade began the same way, with a feeling. The feeling of urgency, the fear of missing out, the frustration of watching a move without him. He wasn't reacting to charts, he was reacting to himself. And that's when he started to understand the truth. The charts weren't tricking him. His emotions were. You see, markets are designed to exploit the human condition. When everyone's greedy, the market sells off. When everyone's fearful, the market rallies. When everyone thinks they're in control, that's when they're most exposed. Because this battlefield isn't physical, it's psychological, it's invisible. And the enemy isn't another trader, it's the emotional version of you. There's a quote from legendary trader Richard Wyckoff. He said, "The market is made by the minds of men." That means every price move you see isn't just data, it's emotion, aggregated and amplified. Fear spikes volume. Greed creates bubbles. Panic causes crashes. When you see volatility, you're watching human emotion play out in real time. Institutions understand that. They create traps that feed on those emotions. They push price just high enough to make you believe, then yank it the other way. They'll hold price flat for hours, knowing boredom will drive traders to make impulsive moves. They're patient. They wait for you to blink, and the moment you do, they strike. That's not coincidence. That's discipline versus emotion. Let me give you an image. Picture two traders. One sitting at his desk, heart racing, clicking buttons, chasing candles. The other is sitting still, calm, watching, waiting for the emotional storm to pass. Same chart, same data, different mindsets. Guess which one walks away with the money? That's why awareness is your best defense. You can't beat institutions at their own game, but you can stop feeding them your emotions. The second you stop reacting to every move, you become invisible to their traps because they can't manipulate what they can't feel. That's emotional discipline. That's psychological armor. Let's bring it down to real-world examples. During the 2020 market crash, retail traders panicked, selling everything in fear. Institutions quietly accumulated. And when the rebound came, they walked away with billions because they stayed calm when everyone else lost control. Same with crypto. Every bull run starts with hype, and every crash starts with emotion. But through every cycle, one truth remains. Fear and greed never change. Technology evolves, markets evolve, but human nature, still the same. So, next time you're about to click buy or sell, ask yourself one question. Am I making this move from strategy or from emotion? Because in the invisible battlefield, every impulsive trade is a bullet fired against yourself, and every moment of patience is a shield. Awareness is the first step. Emotional control is the second. When you begin to see emotion in price, you stop being a victim of it. You start noticing patterns others can't see. You see the fear before it hits. You spot the greed before the trap springs. You trade with clarity, not chaos. That's how you evolve from retail to professional. So let me ask you this. What emotion costs you the most money in trading? Is it fear of missing out? Impatience? Revenge trading? Overconfidence? Be honest with yourself, because that awareness is where mastery begins. Drop your answer in the comments. Let's see how many traders are fighting the same inner war. In the next chapter, we're diving deeper into the mind, into the illusion of control. Because while most traders chase price, professionals know the truth. The only thing you can control in this game is yourself. We'll explore why overanalysis kills performance, how control is just another illusion of the ego, and why the greatest traders win, not by predicting the market, but by mastering their emotions. This battlefield may be invisible, but the war is real. And your greatest weapon is awareness.
You ever notice how traders act like they can predict the market? Like if they just add one more indicator or tweak one more setting, they'll finally crack the code? Yeah, that's the illusion. The illusion of control. We love control. It makes us feel safe. It gives us the illusion that we can outthink chaos. But markets? They don't care about your confidence, your setup, or your backtest. The market does what it wants, when it wants. And the harder you try to control it, the more it controls you. Think about your last losing streak. You probably said something like, if I just wait for confirmation, I'll win next time. Then the next time came, and you jumped in early anyway, because you weren't fighting the market. You were fighting your own need for certainty. That's what kills traders. Not bad analysis, not bad setups, just the refusal to accept uncertainty. Here's the truth. Every trade you take is a bet on probability, not prediction. The best traders in the world don't know what's going to happen next. They just know how to respond when it does. Paul Tudor Jones, one of the greats, once said, "Don't focus on making money, focus on protecting what you have." That's not a trading tip. That's a mindset shift. He's saying, stop pretending you can control the outcome. You can only control the risk. The market is a storm. You don't fight a storm. You navigate it. You manage your sails. You stay centered. You respect the waves, but you don't try to command them. Let me tell you a story. Back in 2018, a young trader named Eric thought he had finally figured it out. He spent months backtesting, finding that one setup that gave him perfect entries and exits. He went all in, confident, ready, unshakable. The setup failed 3 times in a row. He froze. Then he doubled down. Then he blew up his account. The system wasn't broken, his psychology was. He believed control came from precision, but real control comes from acceptance. That's the paradox of trading. The more you try to control the market, the less control you actually have. But the more you control yourself, the less the market can hurt you. That's why professionals focus inward. They don't chase perfection, they chase stability. They know no setup wins every time. No system is flawless. But emotional control, that's something you can build, strengthen, and own for life. When you understand that, your trading transforms. You stop reacting to every candle. You stop trying to guess the future. You start thinking in terms of probabilities instead of predictions. That's what pros do. They play the long game. They think like casinos. A casino doesn't care who wins the next hand. It knows over time the odds are in its favor. That's how you win, not by predicting, but by trusting your edge to play out over time. Here's what emotional control really looks like. It's not the trader who never feels fear. It's the trader who feels it but doesn't act on it. It's the one who loses a trade and shrugs because he knows he followed his plan. It's the one who takes profit, not because he's scared to lose, but because his system said it's time. That's the calm confidence institutions have. That's what separates players from prey. Think about it. Institutions aren't chasing entries. They're positioning. They know that control isn't in timing the market, it's in managing exposure, patience, and reaction. They can't control what happens next, but they can control how they respond. That's why they win. Retail traders, they try to force outcomes. They stare at the screen, trying to bend the chart with willpower. They fight the market, and the market always wins that fight. Here's a secret. The market doesn't reward intelligence. It rewards emotional balance. You can have a PhD in finance and still lose money if you can't control your emotions. But you can have a simple plan, and if you follow it with discipline, you can crush it. Trading isn't about knowing more, it's about feeling less. Let's test your mindset. What do you do when a trade moves against you? Do you cut it fast, or do you hold, hoping it turns? Do you take profit too early, scared it'll reverse? Do you overtrade after a loss, trying to get it all back? If you said yes to any of those, you're not trading the market, you're trading your emotions. That's the illusion of control. You think you're managing trades, but your emotions are managing you. The shift happens when you stop needing control, when you stop needing certainty, when you start trusting the process. You realize the goal isn't to control outcomes, it's to control reactions. The best traders are like surfers. They can't control the ocean, but they can ride the wave with balance and timing. They fall, they learn, they adapt, but they never try to fight the sea. That's emotional mastery. That's real control. Here's a mental trick used by pros. Before entering a trade, they ask, what's the worst that can happen? If they can emotionally handle that answer, they proceed. If not, they pass. No attachment, no ego. Because the moment you need a trade to win, you've already lost control. When you're emotionally neutral, you can see the market clearly, you can act rationally, and you can hold your ground when everyone else panics. Look at Warren Buffett. When markets crash, retail traders panic. They sell everything, desperate to protect themselves. Buffett? He's calm. He's buying while others are fearful. Why? Because he's detached from emotion. He trusts the probabilities. He's not trying to control the short term, he's mastering the long term. That's not luck. That's psychology. Here's the crazy part. Once you stop trying to control the market, you actually gain control over yourself. You stop forcing trades. You stop chasing setups. You wait for opportunity instead of begging for it. And that patience, that calm stillness, that's what separates consistent traders from emotional gamblers. Let me ask you something. When was the last time you did nothing in the market? It felt completely okay with it. That's the test. Because doing nothing when everyone else is doing something, that's strength. That's control. Drop your answer in the comments. Let's see how many traders can admit sometimes the best trade may be no trade at all. In the next chapter, we're going deeper into the emotion that silently drives this entire game: fear. Fear is the market's currency. It moves more money than logic ever could. We'll break down how institutions use fear, how crowds react to it, and how mastering your own fear turns you from prey to predator. Remember, you can't control the market, but you can control yourself. And that's where the real power begins.
You know what moves the market more than any economic report, any news headline, or any technical setup? Fear. Not earnings, not fundamentals, not even logic. Just fear. Pure, unfiltered human emotion. Fear is the market's silent currency. It's invisible, but it's everywhere. It's what drives the charts you stare at, the candles you chase, and the trades that trap you. Let me ask you something. Have you ever been in a trade that was going your way until you started feeling it? Your heart rate picked up. You started thinking, what if it reverses? You closed early, then watched it hit your original target without you. That's fear. Not the kind that screams, but the kind that whispers, what if you lose? Fear makes you act too soon, or not at all. It's the invisible hand behind every bad decision in the market. Here's the truth nobody wants to admit. Institutions thrive on your fear. They design the game around it. They need it, because fear creates liquidity, and liquidity gives them entry. Every time retail traders panic sell at the bottom, institutions quietly load up. Every time retail traders FOMO in at the top, institutions offload. It's not personal. It's business. It's the way the system's built. Think of it like this. The market isn't a place of numbers. It's a mirror of mass emotion. Every chart, every move, every breakout, it's a reflection of what people feel, not just what they know. That's why fake breakouts happen. That's why stop hunts exist. They're not random. They're designed to shake you out of emotional alignment. Remember the 2020 market crash? Fear was everywhere. The news was chaos. Every headline screamed recession. People were dumping stocks like they were on fire. But behind the scenes, the institutions were smiling. They weren't panicking, they were preparing. They saw opportunity where others saw apocalypse. And you know who else did? Warren Buffett. While the world was freaking out, Buffett stayed calm. He famously said, "Be fearful when others are greedy, and greedy when others are fearful." That wasn't just a catchy quote. It was a blueprint for how to think differently from the crowd. Because fear blinds the masses, but it clears the path for those who stay still. Fear, when understood, becomes a compass. It shows you where the herd is running and where opportunity hides. When everyone's scared to buy, prices are cheap. When everyone's confident, prices are inflated. That's the rhythm. That's the pulse of the market. The ones who master fear, they don't follow the crowd, they read it. Let's talk psychology for a second. Fear triggers a part of your brain called the amygdala. That's the same part that controls your fight or flight response. It's ancient, designed to protect you from danger. Back in the wild, fear kept you alive. But in the markets, that same instinct kills your performance. You're reacting to danger that doesn't exist. You're reacting to price movement. So your brain treats a red candle like a tiger. Your body tenses. You hit the sell button before thinking. That's not strategy, that's survival mode. And survival mode doesn't make you rich. It just keeps you afraid. Here's the catch though. Fear itself isn't bad. It's information. It's your body saying, hey, something feels uncertain. The pros don't eliminate fear. They understand it. They use it as data. They ask, is this real risk or is it just emotion? That awareness, that tiny pause between fear and action, that's what separates professionals from emotional gamblers. Let me tell you about Jesse Livermore. He was one of the most legendary traders of the early 1900s. Made and lost fortunes multiple times. And you know what he said near the end of his life? He said the human side of every person is the greatest enemy of the average investor.
He didn't lose to the market. He lost to fear, to greed, to himself. Every trader's downfall starts inside. The chart just reveals it. Think about your own trading history for a second. How many of your biggest losses came from setups that didn't fit your plan, but you took them anyway because you were scared of missing out? How many winning trades did you cut short because you couldn't stand to see unrealized profit drop by a few bucks? Be honest, was it your strategy that failed or your emotions? Drop your answer in the comments, because awareness is where transformation starts. Institutions understand the psychology better than anyone. They know when retail is scared. They can see it, literally, through volume spikes, volatility, and order flow. They wait for fear to hit its peak. That's when they strike. They buy when everyone else is dumping. They add to positions while social media screams crash. That's how they create those V-shaped recoveries that leave retail traders watching from the sidelines. Fear isn't just an emotion to them. It's a tool. Here's a story most people forget. In 2008, during the financial crisis, most of Wall Street was collapsing. Lehman Brothers was gone. The housing market was destroyed. And yet, while the entire world was in panic, Buffett invested billions in American companies. People thought he was crazy. But he wasn't reacting to fear. He was studying it. He knew markets always overreact, and that fear always drives prices below their true value. Years later, those positions made him billions. That's emotional mastery in action. That's what it means to turn fear into opportunity. So, this doesn't mean you should be reckless. It means you should learn to observe fear in yourself and in others. When the crowd is emotional, you must be logical. When they're panicking, you stay calm. Because emotion moves the short term, but discipline wins the long term. Fear will always exist. You can't delete it, you can't outrun it, but you can train your response to it. When you see fear in the market, zoom out. Ask yourself, is this panic justified, or is it just noise? The chart might look scary, but fear fades. And when it does, those who stayed calm are left holding the best positions. Here's something I want you to remember every time you trade. The market punishes emotion, but it rewards patience. When you master your fear, you start seeing what others miss. You stop reacting to noise, and you start responding to logic. And slowly, you realize you're no longer a part of the crowd. You're watching it, studying it, trading around it. That's when everything changes. So ask yourself, right now, are you trading with fear or against it? Are you letting fear drive your decisions, or are you using it as a signal of opportunity? Let me know in the comments, because your answer says everything about where you are in your journey. In the next chapter, we'll step into the minds of those who use fear to their advantage, the institutions. We'll break down how they think, how they move, and how they stay detached while the crowd panics. This is where we turn insight into strategy, where we stop reacting emotionally and we start thinking like the pros. Welcome to Chapter 5, The Institutional Mindset.
Let me ask you something. When you imagine a trader, what do you see? Someone yelling at screens? Sweating over every candle? Chasing green? That's not the real game. That's noise. The real players, the institutional traders, they move differently. They move quietly. They move with intention. No rush, no panic, no hype. Just calm, detached, strategic. That's the institutional mindset. And if you want to survive in this game long term, you've got to start thinking like them. Here's the truth most traders never realize. Institutions don't play the same game retail traders do. They're not chasing trades, they're building positions. They don't react to emotion, they create emotion. They think in probabilities, they act in silence,
and they let time do the heavy lifting. While retail traders look for the next quick setup, institutions are zoomed out, months, even years ahead. Their edge isn't in speed, it's in patience, it's in planning, it's in knowing that real power sits in restraint. You see, institutions don't need to win every trade. They just need to control when they play. They wait for moments when the crowd's emotional, because that's when prices get inefficient. They study your fear, they analyze your greed, and then they position themselves on the other side. It's not manipulation, it's psychology at scale. The crowd acts on emotion. Institutions act on data. There's something you've got to understand here. When a retail trader loses control, they see one candle in panic. When an institutional trader sees that same candle, they see liquidity. They see opportunity. They see entries. It's the same chart, but two completely different mindsets. Think of George Soros. He didn't trade to be right. He traded to make asymmetric bets. Small risk, massive upside. That's the game. It's not about being right often. It's about being positioned correctly when it matters. In 1992, Soros saw something everyone else ignored, a structural weakness in the British pound. While the world saw a stable currency, he saw pressure building under the surface. He placed a calculated bet, a $1 billion short position against the pound. The media laughed. The politicians dismissed it. But when the cracks finally showed, Soros made over $1 billion in a single day. That's not luck. That's strategic patience meeting perfect timing. He didn't need to trade 100 times. He just needed one high-probability play executed with precision. That's the institutional mindset in its purest form. And here's the real lesson. Institutions don't just manage trades, they manage psychology. They know markets move in cycles of emotion: hope, euphoria, fear, despair. They wait for those moments when emotion peaks, because that's when retail traders are predictable. When everyone's euphoric, they sell. When everyone's terrified, they buy. Because emotion clouds judgment, and clarity prints money. Now, let's talk about how they think. Institutions think in probabilities, not predictions. Retail traders say this setup has to work. Institutions say this setup has a 60% chance of working, so I'll size accordingly. One is emotional, the other is mathematical. You see the difference. One needs to be right. The other just needs to survive long enough for probabilities to play out. That's why institutions win over time, because they remove ego from the process. They don't chase being right. They chase being consistent. There's something almost spiritual about the way they move. They don't force trades. They allow the market to come to them. Their silence isn't weakness, it's strength. Their detachment isn't cold, it's control. They know time compounds everything: discipline, conviction, and capital. They're not trying to conquer the market, they're trying to understand it. Imagine sitting in a quiet trading room in London or New York. Rows of screens, dozens of analysts, not a word spoken. No panic, no excitement, just focus. Every move is planned. Every risk is calculated. Every exit is predefined before entry. That's not trading. That's chess. Meanwhile, the retail trader is playing checkers, jumping from setup to setup, hoping emotion turns into profit. But the institutional trader, they're 10 moves ahead. They're patient enough to wait for the board to shift in their favor. And when it does, they move with precision, not hesitation. Here's the thing about institutions. They're okay being wrong. They know losses are part of the game. They just make sure losses are small and controlled. They're not emotionally attached to outcomes. They're emotionally attached to process. They trust math over emotion, data over drama, time over timing. That's why they don't chase charts. They chase edge. And that's exactly what you need to start doing. Start thinking in terms of edge. Start thinking like a risk manager, not a gambler. Ask yourself, what's my position size? What's my exit plan? What's my risk to reward ratio? If you can't answer those questions before entering a trade, you're not trading, you're reacting.
and reaction is the language of the crowd. Institutions speak the language of patience. You might not have their capital, but you can have their mindset. Start with how you think. Detach from outcome. Focus on process. Let probabilities, not emotions, guide your decisions. Remember, the market rewards discipline, not drama. Think about this for a second. What if the secret isn't trading more, but trading less? What if your biggest edge isn't your next setup, but your ability to wait for the right one? Drop your answer in the comments, because this question alone could redefine your entire trading journey. Institutions aren't magicians. They're masters of simplicity. They wait for conditions to align. They plan for uncertainty. They let others chase while they collect. And over time, they build wealth quietly while the crowd burns out loudly. You can do the same. All it takes is rewiring your mind to think bigger, slower, and more strategically. You don't need to predict the market. You just need to understand human behavior, because the market is human behavior just amplified. So next time you trade, don't ask, will this work? Ask, am I thinking like an institution right now? If the answer is yes, you're already ahead of 90% of traders out there. In the next chapter, we'll go deeper into the quiet strength behind this mindset, the discipline of delay. We'll talk about why the best traders make their biggest profits by waiting, why boredom isn't your enemy, it's your advantage, and why time, not timing, is the most powerful weapon in your arsenal. Welcome to Chapter 6, the discipline of delay.
Let me ask you something real. When was the last time you did absolutely nothing and felt okay about it? In trading, that question separates amateurs from professionals. Because the real money isn't made by the one who acts fast. It's made by the one who waits. Welcome to the discipline of delay. You see, patience isn't passive. It's not weakness. It's a weapon, a quiet, invisible skill that most traders never develop. Every new trader wants action. They crave movement, excitement, dopamine. They want to feel like something's happening. But institutions? They understand that boredom is part of the process. They know that waiting is where the edge lives. Jesse Livermore, one of the greatest traders in history, once said, "It was never my thinking that made me money. It was always my sitting." Read that again in your mind. Always my sitting. That single sentence holds more truth than most trading books combined. Because Livermore knew something simple but profound. Markets reward those who can wait for clarity and punish those who demand action in uncertainty. Here's the paradox. The best traders aren't addicted to trading. They're addicted to discipline, to stillness, to the art of doing nothing until the odds are aligned. That's the part most retail traders never master. They think trading is about constant participation, about always being in a position. But institutions, they understand that boredom is part of the process. They know that waiting is where the edge lives. It's midweek. The market's slow. No clean structure, no volume, no setups. A rookie trader sits at his desk, restless. He tells himself, maybe if I just scalp a little, I can make something. So he clicks and loses. Meanwhile, across the city, an institutional trader looks at the same chart, takes one glance, and closes his laptop. He knows there's nothing there. He knows that the absence of opportunity is an opportunity itself. To not trade. That's the difference between reacting and mastering. You've got to understand something about markets. They don't pay you for activity. They pay you for accuracy. And accuracy takes time. Think about it like hunting. The amateur fires at everything that moves. The professional
waits for the one clean shot, because he knows missing costs more than waiting. That's trading. That's patience in motion. There's a bit of neuroscience behind this too. When you wait, when you practice patience, you're literally rewiring your brain to resist impulse. You're training your prefrontal cortex, the part of your brain that makes logical, high-level decisions. Every time you don't chase a setup, you strengthen that mental muscle. And that muscle, that's what separates impulsive traders from consistent ones. Institutional traders aren't calm because they're emotionless. They're calm because they've learned emotional delay. They don't react to the first feeling that hits. They sit with it. They observe it. They ask, is this emotion telling me the truth or just trying to protect me from discomfort? That single moment of reflection changes everything. Because fear fades. FOMO fades. But clarity only comes to the still mind. There's a story I love about Warren Buffett during the 2008 crisis. While the world panicked, he sat quietly, reading financial statements, analyzing companies like he always did. People asked him, "Buffett, aren't you scared?" He said, "Be fearful when others are greedy, and greedy when others are fearful." But what most people miss is that his timing came from patience, from watching, waiting, and trusting his process, not his emotions. That's why he could buy when everyone else was paralyzed, because he'd mastered the discipline of delay. Here's something deep to think about. Your ability to wait determines your future wealth. Most traders lose not because they lack skill, but because they can't sit still. They can't handle the silence between wins. They mistake inaction for incompetence. But in trading, inaction is a form of mastery. It's emotional stillness disguised as discipline. If you can't wait, you'll always chase. And when you chase, you always overpay. Think about how many trades you entered too early because you were afraid to miss out. Now think about how those trades ended. That's not bad luck. That's impatience. And impatience is just fear in disguise. Fear of missing out. Fear of being wrong. Fear of not being enough. But the truth? The market doesn't reward neediness. It rewards neutrality. The more emotionally detached you become, the more clearly you'll see what others can't. The discipline of delay is about emotional alignment. It's about trusting that the right setup will always come, and that forcing one will always cost you. It's like surfing. You can't create the wave. You just have to be ready when it forms. So the question is, can you wait? Can you hold still when your mind screams to act? Can you stay focused when your screen is flat and boring? Because the trader who conquers boredom conquers the market. Here's a small exercise. Next time you feel that itch to trade, don't. Instead, sit back and just watch. Watch your thoughts. Watch your impulses. Notice how your brain tries to convince you that something's happening. It's not. That's just your dopamine system begging for action. Let it pass. Learn to breathe through it, and you'll start to see the rhythm behind the market. The best trades don't come from prediction. They come from patience. Livermore waited. Buffett waited. Every professional trader who made it long-term learned this truth, that waiting is a position. Sometimes your most profitable day is the one you don't trade, because in that stillness, you protect your capital, your energy, and your focus. So here's a challenge for you. For 1 week, only take trades that meet your perfect criteria. No exceptions, no maybe setups, no impulses.
just discipline. And when that boredom creeps in, remember, boredom is your body detoxing from emotional overtrading. It's not a signal to act. It's a signal that you're leveling up. The market rewards those who can sit through uncertainty without breaking discipline. That's why patience feels hard, because it's the training ground of mastery. Every moment you resist impatience, you're sharpening your edge. Every delayed impulse is a win for your future self. So ask yourself right now, would you rather look busy or be profitable? Would you rather chase excitement or build consistency? The answer to that question defines your trading identity. Drop it in the comments. Let's see who's ready to evolve beyond reaction and step into discipline. In the next chapter, we'll talk about something even deeper, the emotional mirror. How the market doesn't just test your strategy, it reflects you, your fears, your hopes, your patterns. Because in the end, you're not just trading charts, you're trading your own psychology. So stay with me as we enter Chapter 7, the emotional mirror.
Let me hit you with something that might sting a little. You're not trading the market. You're trading yourself. Every time you click that buy or sell button, you're not reacting to price. You're reacting to you, your fear, your greed, your hope, your ego. And until you face that truth, you'll keep losing the same way, over and over again, just with different charts. Welcome to the emotional mirror, the chapter most traders skip and the one that separates the gamblers from the professionals. See, the market isn't your enemy, it's your reflection. Every time you panic sell, every time you overtrade, every time you jump in too early or hold too long, the chart is just showing you your own emotions, painted in candles and wicks. Let's make this real. There was a trader named Ryan, a sharp guy. He studied hard, knew his setups, nailed his back tests. But in live trading, he kept blowing up accounts. Every time he made a little profit, he doubled down. And every time he lost, he'd jump back in to make it back. Sound familiar? After months of chaos, he finally realized something powerful. He wasn't fighting the market. He was fighting his fear of losing. It wasn't about strategy. It was about identity. He couldn't handle being wrong because being wrong made him feel small. And until he healed that, no indicator could save him. That's the hard truth nobody wants to hear. Your trading results are a mirror of your internal world. If you're emotionally scattered, your trades will be too. If you crave control, you'll overmanage every position. If you fear loss, you'll miss every opportunity. The chart doesn't lie. It simply reflects. Ever notice how the same patterns repeat in your trading? Not just on the charts, but in you. The same kind of impulsive entry, the same frustration, the same revenge trade. Different day, same emotion. That's your emotional blueprint. And until you rewrite it, the market will keep handing you the same lesson, just in a louder voice. Here's the part nobody teaches in trading courses. Every trade you take has a shadow emotion behind it. You think you're entering because of a setup, but deep down there's something else driving it. Fear of missing out, fear of regret, need for validation, desire to prove you're right. And that's the dangerous part, because once emotion hijacks logic, discipline goes out the window. You stop trading probabilities and start trading pain. There's a quote I love from Mark Douglas, author of Trading in the Zone. He said, "The market doesn't create your emotional highs or lows. It just triggers what's already inside you." Read that again in your head. It triggers what's already inside you. That means the work isn't on the charts. The work is in your mind. Let's go deeper. Imagine two traders watching the exact same setup. Trader A sees opportunity. Trader B sees risk. The chart didn't change.
Their state did. Trader A feels calm, detached, observant. Trader B feels anxious, doubtful, afraid to miss out. And guess what? Their results will mirror their emotions every time. That's why institutional traders seem almost robotic. It's not because they don't feel emotions. It's because they've trained their awareness. They see their fear, but don't obey it. They feel greed, but don't chase it. They observe the emotion without identifying with it. They've mastered emotional distance, that inner gap between impulse and execution. That's their real edge, not some secret algorithm, not insider info, emotional mastery. Now, here's something personal. Think back to your last 5 bad trades. What emotion was running the show? Be honest. Was it frustration? Was it ego? Was it fear of missing out? Drop it in the comments, because naming it is the first step to disarming it. You can't fix what you refuse to face. Let's talk about ego for a second. Ego is the silent killer of good traders. It whispers things like, "You have to win this trade. You can't be wrong. You're smarter than the market." But here's the truth. The market doesn't care how smart you are. It only cares how disciplined you are. Ego blinds you to reality. It makes you hold losers too long. It makes you add to bad trades because you can't admit defeat. And every time that happens, you're not trading to make money anymore. You're trading to protect your pride. That's how accounts die. Not from bad setups, but from bruised egos. The best traders I know treat losses like tuition. Each one teaches something. Each one holds a mirror. They don't say, "I lost." They say, "I learned." That mindset shift, from pain to feedback, is what transforms average traders into consistent ones. Here's a quick reflection exercise for you. After every trade, win or lose, ask yourself 3 questions. 1. What was I feeling before I entered? 2. Was my decision driven by logic or emotion? And 3. What can I learn about myself from this outcome? Do that consistently, and you'll start to spot your own emotional patterns faster than any candlestick formation. You'll realize trading is less about mastering charts and more about mastering your response to them. Here's a story about Paul Tudor Jones. In his early career, he was overconfident, reckless, pushing big trades because he wanted to prove himself. Then he took a massive loss, the kind that humbles you to your core. After that, he changed everything. He said, "Don't focus on making money. Focus on protecting what you have." That wasn't about risk management. That was emotional evolution. He learned to trade from a place of calm control, not emotional impulse. That shift from ego to awareness made him one of the greatest traders of all time. Here's the reality most traders don't want to accept. If you keep facing the same losses, you're being shown the same internal lesson. Maybe it's about patience. Maybe it's about control. Maybe it's about fear. But the market won't stop showing it to you until you finally learn it. Trading is an emotional mirror. It reflects your confidence, your fear, your self-worth. That's why growth in trading is always personal growth first. When you master your emotions, you master your results. The charts don't change. You do. And when you change, the game changes with you. So let me ask you one thing. When you look at the charts tomorrow, what part of you will you see reflected back? Will you see the old you, reactive, impatient, chasing noise? Or the evolved you, calm, disciplined, self-aware? Your answer to that question defines the kind of trader you're becoming. Drop your thoughts in the comments, because awareness shared is awareness strengthened. In the next chapter, we'll go even deeper into the heart of trading psychology, where chaos meets calm. You'll learn how to hold still when the market shakes, how to regulate your emotions when volatility spikes, and how the pros stay ice cold under pressure. Because stillness is the most powerful signal. Get ready for Chapter 8, The Calm Within Chaos.
The market starts moving. Candles flash red and green like a heartbeat on caffeine. Your pulse rises. Your breathing shortens. Your mind screams, "Do something!" But the best traders in the world do nothing. They sit still. They breathe. They watch. Because in chaos, stillness is power. This is The Calm Within Chaos, a chapter about mastering your inner world when the outer one goes wild. When volatility hits, amateurs try to control the market. Professionals control themselves. Let me ask you something. How many times have you entered a trade just because you couldn't stand the silence? Because watching price move without you made your body itch? Yeah, that's not strategy. That's your nervous system screaming for relief. Trading isn't just a game of charts. It's a battle against your own physiology. The truth is, your body reacts to market stress the same way it reacts to danger. Your brain releases cortisol. Your heart rate spikes. Your vision narrows. In that state, you don't think, you react. You go full survival mode. And survival mode has no place in trading. You can't make logical decisions when your brain thinks it's fighting a lion. That's why top traders train themselves like athletes, not just mentally, but physically. They know that calm isn't a feeling. It's a skill. You don't feel calm. You train calm. Let me tell you about a prop trader named Alex. During the 2020 market crash, his entire desk was losing it. Phones ringing, traders yelling, charts melting down. And Alex, he looked like a statue. Calm, silent, breathing, steady. When everyone else panicked, he waited. When the market found its bottom, he positioned perfectly. While others burned out, he cashed out. Later, when someone asked how he stayed so calm, he said, "I've practiced not reacting. I just breathe through it." That one line stuck with me. I just breathe through it. It sounds simple, right? But that's the foundation of elite composure, controlled breathing. Here's why it works. When you slow your breath, you tell your brain you're safe. The stress response shuts off. Your focus sharpens. Your perception widens. That's when logic comes back online. So next time the market starts shaking, try this. Inhale for 4 seconds, hold for 4, exhale for 6. Keep your eyes on the chart, but anchor yourself in your breath. That's how you stay centered when everything else spins. Another secret? Detachment. The best traders aren't emotionally tied to any single trade. They care about the process, not the outcome. You can't be calm if your identity is on the line every time you click buy. So repeat this to yourself. One trade doesn't define me. My discipline does. Say it until you believe it. Because detachment doesn't mean you don't care. It means you care correctly. You care about execution, not emotion. Let's talk about acceptance, the final piece of calm. Most traders resist loss. They hate being wrong. But that resistance creates the very tension that wrecks them. The pros? They accept uncertainty. They know loss is part of the game. They don't fight it. They absorb it and move on. They've learned that mental stillness comes from surrender, not control. Here's the neuroscience behind it. When you resist reality, your brain burns energy fighting what is. That's why emotional traders feel drained even after a short session. But when you accept uncertainty, your brain relaxes. You save mental fuel for what matters: reading flow, timing entries, managing risk. Acceptance isn't weakness, it's strength under control. Let's make it practical. The next time you feel panic rising, do this checklist. 1. Check your body. Is your breathing shallow? Fix that. 2. Check your mind. Are you predicting or reacting? 3. Check your intent. Are you trading to win or to escape discomfort? That's how awareness rewires reaction. There's a great story about Richard Dennis, the legendary founder of the Turtle Traders. During huge market swings, his students would freak out. Dennis, calm as ever, would just watch the price action. One of his students asked, "Don't you ever get nervous when the market moves like this?" Dennis smiled and said, "Nervous? No. I've seen chaos before. It's just noise until it's signal." That's the mindset. The chaos doesn't scare you when you've trained your calm. And that's the paradox. The quieter you are inside, the louder the market speaks. Stillness amplifies clarity. You stop chasing candles, you start reading rhythm. Because in truth, volatility isn't the enemy. Your reaction to it is. Let's be honest here. Anyone can look smart when the market's calm. The real test comes when it's moving fast, when your emotions flare and your logic fades. That's where discipline either collapses or crystallizes. It's not your system that saves you then. It's your state. So tell me, how do you handle chaos? Do you freeze up when your trades go red? Or do you lean in, stay centered, and let the storm pass? Drop your thoughts in the comments. Your calm is your edge. Let's see how many of us are working on that mastery. There's one more insight I want to leave you with. The best traders treat calm like muscle memory. They train it daily. Meditation, journaling, cold showers, exercise. Not because it's trendy, but because it strengthens the gap between stimulus and response. That gap is everything. It's where emotional chaos turns into deliberate choice. And that's the space where professional trading lives. The market rewards emotional neutrality, not excitement, not fear, just presence. That's what separates those who chase noise from those who read truth. When you master the calm within chaos, you stop trading for dopamine and start trading for freedom. So remember this. The market's job is to test your emotions. Your job is to stay centered. Every flicker of price is a wave. You're not the wave. You're the ocean. Be still. Be grounded. Be the calm within chaos. In the next chapter, we're going even deeper, beyond calm, into mastery. You'll learn how to build unshakable habits, how to rewire your discipline, and how to make consistency your true edge. Because in the end, your system isn't your power. Your state of mind is. Get ready for Chapter 9, Mastering the Game Within.
Let me ask you something. What if I told you your biggest opponent isn't the market? It's you. Not the algorithms, not the institutions, not the fake outs or stop hunts. You. Because every trader, no matter how smart or skilled, eventually realizes the game isn't out there, it's in here. This is Chapter 9, Mastering the Game Within. At some point, every trader hits a wall. Not a technical one, a mental one. You study harder, you learn new indicators, you tweak your system again and again. But nothing sticks. Nothing changes. You're stuck in a cycle of progress and relapse, confidence and doubt. And deep down, you know the truth.
It's not your strategy that's broken. It's your state. Trading isn't about finding the perfect setup. It's about becoming the person who can execute one flawlessly. That's the difference between retail chaos and professional control. Retail traders chase excitement. Professionals chase consistency. One looks for dopamine, the other builds discipline. Here's the reality most traders never face. You can't outperform your own psychology. You can have the best system in the world, but if your emotions hijack your decisions, you'll sabotage it every single time. Your mindset sets the ceiling for your performance. So the question is, how high do you want that ceiling to be? Ray Dalio, one of the greatest investors alive, said it best. Pain plus reflection equals progress. Think about that. He didn't say knowledge equals progress. He said pain plus reflection. Because mastery doesn't come from success. It comes from analyzing your failures without ego. Dalio built Bridgewater, one of the biggest hedge funds in the world, on one simple principle: radical self-honesty. He trained his team to confront their own blind spots brutally and consistently. No excuses, no denial, just truth. That's what inner mastery looks like. Let's break it down for traders like us. You lose a trade, you get emotional. You double down to make it back. Sound familiar? That's not bad luck. That's untrained psychology. Every time you react emotionally, you're giving your power away. But every time you observe that emotion instead of feeding it, you're reclaiming control. The goal isn't to be emotionless. It's to be emotionally aware. You can't delete fear or greed, but you can see them, name them, and choose not to obey them. That's the beginning of mastery. Here's a simple exercise I teach traders. After every session, write down 3 things. 1. What emotion drove my trades today? 2. Did I act on impulse or intention? 3. What would I do differently if I traded like my best self? Do that for 30 days straight. You'll start to see patterns. Not in the market, in you. And once you can read your own emotional chart, you can finally trade with clarity. Let me tell you a story about a trader named Marcus. Marcus started strong. He turned a small account into 6 figures in a few months. He thought he'd cracked the code. Then came the crash. One bad trade, then another. He kept averaging down, refusing to admit he was wrong. In a few weeks, he lost almost everything. Devastated, he quit trading for 6 months. But instead of blaming the market, he started studying himself. He read about emotional regulation, cognitive bias, and mindfulness. He journaled every thought, every trigger. He built routines, strict sleep, workout, meditation, no FOMO trades. When he came back, his strategy hadn't changed, but his state of mind had. And that changed everything. He started winning, not because he found better entries, but because he found better discipline. Marcus didn't master the market. He mastered himself. That's the game within the game. Most traders spend years trying to master price action, but never master their own reactions. They tweak their systems endlessly, but ignore the mental system running them. But the truth is, your mind is your system. If your thoughts are scattered, your results will be too. If your routines are sloppy, your execution will be shaky. If your emotions run wild, your account will too. Trading performance is just psychology expressed in numbers. Let's talk about routine, the foundation of mastery.
Every professional trader has rituals: morning prep, chart review, mental reset. Not because it's sexy, but because it's structure. Structure builds consistency. Consistency builds confidence. Confidence builds calm. And calm? That's where you make your best decisions. When you strip away the randomness of your emotions, you start seeing the market as it truly is, not as you fear or hope it to be. Let me ask you, what's your trading ritual? Do you have one? Or do you roll out of bed, open your charts, and let emotion take the wheel? Comment below with one routine you're committing to, something small but consistent. Because here's the thing, you don't need massive changes. You need micro habits done relentlessly. It's the boring stuff that makes you rich, not the adrenaline. Jesse Livermore, one of the greatest traders in history, once said, "The big money is not in the buying and the selling, but in the waiting." That's what mastering the game within gives you: patience. When you're grounded, you don't need to chase. You let the market come to you. That's emotional wealth. And emotional wealth always precedes financial wealth. Here's a truth most traders ignore: you can't out-trade who you are. If you're impatient, you'll trade impulsively. If you're greedy, you'll over-leverage. If you're fearful, you'll cut winners too soon. The charts don't lie. They mirror your inner world. So every losing streak, every bad entry, every blown account, it's feedback. Painful, yes, but priceless. It's the market saying, "Hey, your emotions need work." And once you start listening to that feedback, instead of resisting it, you evolve. Let me leave you with a powerful quote from Ray Dalio's Principles. He said, "If you can't look at your mistakes objectively, you'll never learn." That's the heart of this chapter. Mastering the game within means you stop hiding from your own patterns. You face them head on. You build routines that protect you from yourself. You become consistent, not because the market calms down, but because you do. Every day you have a choice: to trade emotionally or to trade consciously, to react or to respond, to chase or to wait. That choice, made thousands of times, defines your career more than any strategy ever will. So here's the truth, trader. You don't need more indicators. You need more self-awareness. Because once you master the game within, you realize the charts were never the battlefield. They were just the mirror. And that reflection, once you learn to read it, becomes your greatest edge. In the next and final chapter, we'll bring it all together: the lessons, the pain, the patience, the growth. You've learned to see emotion, control your state, and trade from clarity. Now it's time to evolve from a retail thinker to an institutional mind. Because mastery isn't about predicting markets. It's about becoming the kind of person who doesn't need to. Get ready for Chapter 10, The Awakening, Becoming the Institutional Mind.
Chapter 10, The Awakening, Becoming the Institutional Mind. Let me ask you something. What if all this time you weren't actually learning how to trade, you were learning how to think, how to feel less, how to wait more, how to see clearly? Because the real awakening in trading is realizing that markets don't reward intelligence, they reward emotional control. You began this journey chasing candles. Now you're learning to read human behavior. That's the hidden game. And the moment you understand that, you stop reacting and start observing. There's a quiet shift that happens in every trader's evolution. At first, you chase the market. You're glued to every tick. Your heart rate jumps with every move. Then, something breaks. Maybe it's a big loss. Maybe it's exhaustion. And in that breaking comes awakening. You realize the game isn't about winning every trade. It's about becoming someone the market can't manipulate. That's when you step into the institutional mindset. Institutions play a different game. They're calm when everyone else panics. They're patient when everyone else rushes. They think in probabilities, not predictions. They build positions while retail traders chase headlines. They wait for emotion to flood the market, and then they move, silently. They don't need to be right often. They just need to manage themselves better than you. That's the ultimate edge, psychological positioning. George Soros once said, "It's not whether you're right or wrong that matters. It's how much money you make when you're right and how much you lose when you're wrong." That's an institutional truth. They don't aim for perfection. They aim for asymmetry. Small losses, big wins. Low emotion, high clarity. Because when your mind is stable, you see what others can't. You see manipulation for what it is, a reflection of fear and greed, not a signal of truth. Let's talk about something most traders never understand: emotional detachment. Detachment doesn't mean not caring. It means caring correctly. It's the art of being in the game, but not owned by the game. When you're detached, you stop trying to control outcomes. You start controlling your response. You stop trying to fight the storm. You become the calm inside it. And that's when everything changes. You know what's ironic? The more you detach, the better your results get. Because detachment removes desperation. It creates clarity. And clarity attracts opportunity. When you stop needing a trade to work, you finally start trading well. That's the paradox of mastery. Let's paint the transformation. The retail trader, emotional, impulsive, chasing highs. The institutional trader, composed, detached, unshaken by noise. Same market, different mindset. That's the awakening. It's not about doing more. It's about being less reactive. You stop needing certainty. You start trusting probability. You stop fearing loss. You start embracing process. And in that shift, you stop playing the market. You start playing yourself. There's a line I love from Mark Douglas, the author of Trading in the Zone. He said, "The best traders have no expectations, only acceptance." Read that again. No expectations, only acceptance. That's the institutional way. No emotional attachment to outcome, just flow, observation, execution. When you master that, you can walk through chaos and stay still. You can lose a trade and keep your peace. You can win and stay humble. Because you finally understand this game was never about markets. It was about you. So let me ask you, trader, are you ready to stop chasing price and start mastering yourself? Drop a comment right now. What's one thing you've learned about your own psychology through this journey? Because your awareness, not your analysis, is what will determine your future in this game. You've come a long way. From confusion to clarity. From emotion to discipline. From reaction to reflection. That's what it means to become the institutional mind. And as we move into the final chapter, you'll understand the truth every great trader eventually discovers. That your greatest trade was never made on the chart. It was made within. Transition to final chapter. Final chapter. Your next move. You've reached the end of this journey. But in truth, it's just the beginning. Because now, you see the hidden game. You know how institutions think. You understand how emotion drives the market. And more importantly, you understand how emotion drives you. The market will test you again. Tomorrow, next week, next year. It'll pull your fear. It'll trigger your greed. It'll whisper the same lies it always has. This time is different. But you'll know better. Because now you've seen behind the curtain. You know that trading isn't about chasing, it's about waiting. It's not about predicting,
It's about positioning. It's not about winning every battle. It's about surviving the war. Here's the truth. Every chart is a reflection of human emotion, but every decision you make is a reflection of yours. And the moment you master that connection, you stop trading for excitement and start trading for freedom. Freedom from overthinking, freedom from fear, freedom from the need to prove yourself. Because when you're emotionally free, the market can no longer control you. You control you. Ray Dalio once said, "The happiest people discover their own nature and match their life to it." You're doing the same with trading. You're aligning who you are with how you trade. You're no longer at war with the market, you're in sync with it. That's the awakening. That's the hidden game. So what's your next move? Keep growing. Keep learning. Keep building patience, not predictions. Don't just trade charts. Trade your own evolution. Journal. Reflect. Practice emotional awareness in every aspect of life. Because if you can master your emotions here, you can master them anywhere. And remember this, your greatest trade isn't your biggest win. It's your ability to stay calm when everyone else loses their mind. That's emotional wealth. And emotional wealth creates financial freedom. If this audiobook opened your mind, I want to hear from you. Drop a comment below. What's one lesson hit you the hardest? What mindset are you taking forward? And if you're ready to keep leveling up, hit that subscribe button. Join the Pike Rich family. Because here, we don't just teach trading, we teach self-mastery. This is your journey now. Your discipline, your awareness, your patience. The market will always test you, but now you have the tools to stay centered. Remember, you don't need to control the market. You only need to control your mind. Thank you for walking this path with me. And as you move forward, trade calm, trade conscious, trade rich in mind. Because the hidden game isn't about the money. It's about who you become in pursuit of it.